To be successful in the crypto market, I can't drill this home enough, you need a strategy. You need an entry plan, you need an exit plan, and you need to know exactly what you need to do to your portfolio to give it the best possible chance of success. So I know what I need to do if the price goes down. I know what I need to do if the price goes up. I'm prepared for both, and I'm ready to see where this thing takes us. So we've got our portfolio picks. We're going to look at how the portfolio is performing at the moment. Is there any potential options to bring our entries down? Is there any new cryptos that are entering buy zones? Let's dive in. Okay, here's the portfolio. You can see that we're down 6.6%. How much is that down in comparison to the rest of the market? We can go to crypto bubbles and we can get an overall sentiment of the market on the week within the crypto bubbles. You can see we're down between 10 and 15%. You've got tier down 16.1%, start down 15.2%. So we're averaging between 10 and 15% to the downside. And when we go back and we look at the portfolio, that 6.6% means that our entry levels were good. We're averaging down. We're building whilst the market is coming down. When the market's red, that's when I'm interested. When the market's green, I'm either looking at taking profits or taking some off the table to reaccumulate at those lower levels. So I've got a strategy in place for when the market's good, when the market's bad, and when the market is in that indecision phase. And that's the key to being successful in crypto, is having a strategy where you're prepared for all scenarios. We know what we're doing when it goes up. We know what we're doing when it goes down. We know what to look out for when the market is sideways indecision. So we're down $22.96. Portfolio's 326.27, and I wanted to build this portfolio with next to nothing. I'm going to be adding £50 or $50, should I say, each time that I build and add a new crypto to this portfolio. So we're building when we're going down, we're taking out when we're going up. So think of a house, guys. We're going to be building a house. We're in the house building phase at the moment. So we're getting all the materials. That's our cryptocurrencies. And we're going to start building this house with cheap materials. We're getting these cryptocurrencies cheap. We're using cheap materials and we're going to build our house. We're going to live in our house for a short period of time. And then towards the end of the bull run, we're going to be selling those materials back to the market slightly over a period of time. So intention is averaging down on the way down, averaging out on the way up. And that's what we're going to be planning on doing. We're going to be selling our house at a much higher price than what we built it at. So the crypto fear and greed index, we look at this for sentiment. How well is the market performing as far as greed and fear is concerned? You can see that we're quite greedy at the moment. Does that mean that we're not going to get any killer entries, or does that mean we've got opportunities? Remember, we're preparing for the upside, we're preparing for the downside. We've got opportunities within this portfolio to do many things, whether the market's up or whether the market's down. Right, okay, that's enough rambling from me. Let's jump into the charts and find out what opportunities we've got this week. And before we get into that pick of the week, we're going to go through the existing portfolio. I'm going to show you how it's been structured and how we can take advantage of both upside and downside. So you can see Arbitrum. We've got Arbitrum 80 cents. Arbitrum is now sitting at 68 cents. That means that I can average Arbitrum down when it hits the next key level of support. This is where I'm interested in Arbitrum. If it comes back down to 50 cents, I'm going to be buying $50 at 50 cents. And what's that going to do? It's going to bring our average down to 65 cents. So it's a powerful tool that once you've got an entry, it doesn't mean that has to be your final entry. You could still get a cheaper entry by averaging down, and that's built into this strategy. So you can see that if we pull back down to that 50 cent level, I'll be loading $50. What happens if we go here? $2.05. If we hit $2.05, taking 50% off the table. You can see we don't know how well these are going to perform in the bull run. Some cryptos are going to put all-time highs in. Some cryptos aren't going to put all-time highs in. But bear in mind, all cryptocurrencies will run. The majority of them is going to run. So Arbitrum, not interested in Arbitrum again. We know exactly where we're interested in Arbitrum. It's on the chart, 50 cents. Got Beam next. So you can see Beam, we had that nice break on Beam. We've come back down. We've had a retest on Beam. If Beam comes down, it hasn't got too far to come down. If Beam comes down to 0.025, I'm averaging that down because I know that this move here, 888%, and that's just somewhere where it's been a few months ago, 6 months ago that was there. When you look at Beam overall, you can see all this price action up here. If Beam put in a new all-time high, that would go parabolic, and that is why we only take 50% off the table. We can allow the rest of the 50% to ride, and when you're getting 880% on something and you're taking 50% off the table, that means you're taking a good few $100s off the table, and that means you've got a good few $100s riding still for the next bull run. So this is the thing, we're taking some off the table to capitalize ourselves, but then we're letting the rest run for the bull run, and then over a period of time we'll be scaling out with the rest of it. But the ultimate goal is that once we've taken out these profits, we are taking out our initial capital and then some. So we're building on capital as well as staying in the market. That's why a powerful strategy is important. Okay, we've got scallop here. I want scallop to come down to 10 cents. If scallop comes down to 10 cents, I'm averaging my scallop price down. If scallop goes to 61 cents, I'm taking 50% off the table. You can see we're in this clear range here. If we were range bound, imagine how much advantage that you could take from this when you've got upside potential from this range of 435%. If that was ranging 435% all the time, how much could you take advantage of that, and how well would your portfolio look at the end of it? Right, okay, people are scared to take profits here. People think if you take profits here and it goes to $1, it goes to $2, that you've missed out. You need to change your mindset. Be happy with what you've got, and you've still got the 50% remaining to go to that $1 to the $2 if it decides to go there. Right, AVAX next. See, AVAX, we've had this nice break on AVAX. We've had the nice break, we've had the retest. I don't want AVAX until we get down to $8.74. So that's going to be my average down price, $8.74. My take profits up here, $93.83. $93.83. AVAX went to $150 in the last bull run, so I think it's quite likely to go to $93.83 and then some. So 50% off the table at that price. Okay, we've got Proppy next. Proppy. So my load or average down price is 47 cents on this. If Proppy comes down and tests this previous low at 47 cents, then I'm going to double down 50% off the table at $3.32. Build these into your charts, guys. Trading View's free. Familiarize yourself with it and use it. Right, okay, so Matic. I love the range on Matic. It's only a short range, but I've put this in there as a little bit of caution. We should be able to do well off this. You've got 50 cents at the bottom of the range, you've got $1.26 at the top of the range, and it's respected this range for such a long time. If we were trading this range back here, imagine how well we would have took advantage of that. If this range continues, we can still take advantage of it. So I've got my load-in area at 50 cents. Got my take profits up here at $1.26. $1.26. So it's a shorter range on Matic. You're only talking bottom of the range to the top of the range, 145%, but it's not to be sniffed at. Remember the stock market, you do that in a year. 1, 2, 3%, 4%, 5%, 6% in a year, and people rave over that. Do that in crypto within an hour. Right, Sheba. Sheba was our next entry. You can see Sheba's potentially been in this range for such a long time. This is the reason why I was interested. We've broken through with some velocity, we've come back down and we're retesting this. So if Sheba pulls back into this range and tests this bottom, 0.000635, loaded 50%. If it comes back to test this previous high, 0.000493, I'm taking 50% off the table. You see where Sheba was in the last bull run, all the way to 8840. Right, okay, pick of the week, guys. It's going to be one of these. It's going to be Gala, Theta, or Injector. I'm going to go over them now. I'm going to show you why I'm interested in these. You can see Gala is ready to break. It's ready to break, and when you zoom out of the Gala chart, it looks a little something like this. That's where Gala's been. So you've had the typical bull run. You've had a big move in 2021. Gala hit highs, 85 cents. We've come back down. We've been in an accumulation phase. The bigger the base, the higher the space. And then we've had a bump, and then we're going to get a run. It's looking like we're going to get a run. We've had the bump. This has shown that people are interested. People are still buying Gala. You've had this big, massive surge in price action here. It doesn't look much when you look at it overall, but that's a move of 728% to the upside. So Gala I'm interested in Gala, and I'd be coming out of Gala here, 15 cents. But is it the one that we're going to be adding this week? Potentially. Got Theta next. Got Theta next, right, okay. I think potentially I'm going to be waiting for the break on Theta. I might come and revisit this later today. I'm going to do a couple of videos today. One positive thing that we've got here, look, we were talking about this in the last video, inverse head and shoulders. Inverse head and shoulders. So you've got the left shoulder here, you've got the head, you've got the right shoulder forming here, and if we break this trend here and then break the neckline, you can measure from the neckline to the tip of the head, to do it properly, from the neckline to the tip of the head. You can imagine that this move, or you can estimate that this move would be going to $2.15 once we've broken the neckline. I like the look of Theta, so if we zoom out and look at the downside potential to the upside potential, I'd be loading 50% and averaging down at 57 cents, and then take profits as all the way up here at $6.83. So that's a big move there. We're not testing the previous high, we're testing extension levels on Theta because it's got so much room to run. Haven't bought that yet, hasn't been put into the portfolio. Right, okay, this is a different reason why I'm liking this one, injector protocol. The reason why I like this, right, there's a couple of reasons why I like this. First and foremost, that was the previous high. What's happening? Resistance, resistance. Now it's flipped and tested a support once, tested a support twice, 3 times, holding support. So there's 2 ways that you can play this, because you'll be looking for extensions. You see the extension from here, from this move here to the low. You can pull that up. You can see that we had a reaction from the 1618. We always get reactions from the 1618. That's a sticking point. And when a crypto's in price discovery, we've got no resistance to go by. We use the Fibonacci tools. And that's what everybody else has done, because look what happened. Rejection at the 618. So that was that move, and we can do exactly the same. Do exactly the same with this move, and this is going to give us some kind of projections. So if we're shooting for the 1618 again on this extension, you're looking at a price of $75. $75 there. So you've got $75 there. Am I interested in that? I think looking at these, the best way of gains for me on this one is going to be Gala. I like the look of Gala. It's not too far from its low. It's not too far from its low. We've got a drop. Remember, we're measuring risk management here. We've got a drop of 45% to the top of the range on Gala, 200%. However, we've got some strong levels here because we've got the gap here. What do we talk about? The gaps, the gaps, the gaps. When there's a lack of build-up of price action, you've got a gap here. Once you've broken this level here, once you've broken the top of this range, you'll see a spike straight through like that without any resistance. And that spike from the top of the range is 119%. From where price action is now, 560%. I think Gala is going to be the one that's going to be added. So I'm going to be adding that today. I'll stick it in the CoinGecko portfolio. I'll stick it to the portfolio that I've got on Mexi, and then we'll see where this thing goes. Right, okay, if you did enjoy this video, guys, I've potentially got another video coming up with another pick, because I've seen another one that's caught my eye that I want to add into the portfolio. So stay tuned for that one. That'll be coming shortly. Enjoy the rest of your day, guys. Take care, and goodbye from me.